Good afternoon and welcome to Boom, Doom and Zoom. I'm Paul Rickard, and this week I'm joined by my special guest. It's Michael Gable. Michael, of course, is the Managing Director of Fairmont Equities. Michael, how are you?
Good, thanks, Paul. How are you?
Not too bad. An interesting week. Market's still doing pretty well. We probably a little more excitement by following the RBA announcement on Tuesday, which the market interpreted as being fairly dovish. Is that the way that you saw it?
Yeah, I think with that reference to the possibility of a 50 basis point cut, um, I think it's caught most people off guard. And I mean, in a good way if you want rates to go down. So, um, yeah, now, we're getting calls that we should see potentially another rate cut in July. So we'll see how things develop between now and then. A lot can happen, of course.
Yeah, it sure can. That was certainly not an expectation before going into it. So anyhow, we are where we are. So that's the RBA. Now, the US, meanwhile, we're seeing Treasury bond yields back up well above 5% from the 30-year and get a little nervous, but we'll just see how that plays out over the coming weeks. Now, let me get to your questions, but before I do, just first of all, the important information on the screen in front of you, which says that we don't know anything about your particular financial situation, investment objectives, or particular needs. So before acting upon anything we say, we always suggest that you get the appropriate financial advice or seek the appropriate professional advice, because what we think is brilliant financial information may not be suitable for you. That's essentially what that disclaimer says. So what might be right for one person is not necessarily appropriate for you. First question comes from Chris. He says, "Hi guys, are you buyers of Cochlear at these levels?" Michael, I'll throw that one to you.
Look, I'm not a holder of Cochlear at the moment. In terms of being a buyer, look, I haven't looked at its sort of, valuation. I haven't looked at its last set of results. I think from memory, it's, trading at fair value. But of course, because I like looking at the charts, it is a chart that caught my attention the other day because it does look like it's bottomed out since it sort of peaked there about a year ago. I mean, I'd like to see it push through that $280 level. To me, that would indicate that it has found a low and it can head higher. So, yeah, potentially we could see these healthcare stocks become a bit of a safe haven at the moment. I notice CSL's catching a bit of a bid at the moment, and ResMed's holding up pretty well. So, yeah, one to keep an eye on, but I don't have a strong opinion at this point in time.
Yeah, I've been recommending to a couple of clients around at these sort of levels. It's not really breaking out of the range. It hasn't done much. And if you look at that chart, we're still well below where we were, say, in the earlier part of the year. But as in all the health stocks, they're sort of starting to find a little bit of base. There are a lot of very other expensive stocks, and maybe the market's starting to turn to it. But I understand your point of view, Michael, that really you probably want to see it push through 280. But I think there's some reasonable value in Cochlear, but it's just not, it hasn't done enough to break out yet, and maybe it's one to keep a close eye on. So, Chris, I wouldn't talk you out of it, but I'd just be a little bit wary. It still looks pretty range bound on that chart, anyhow. Let's go to another question here from Kieran. Looking at Zip. Hi guys, looking at the buying Zip money, a little bit of a pullback. Any thoughts, please?
It's been a bit of a wild ride in the past year. I mean,
Yes,
50
hasn't it?
cents to 350, fantastic return if you were on that. And then it's given back most of those gains. Um, Look, the bounce off those lows in April is looking good. I mean, from a charting point of view, if I just looked at the chart, I'd say, yeah, this thing's heading in the right direction. It's had a bit of a dip the last few days. Maybe that's an opportunity. You've got to run a stop loss, I think, on something like this. I think on the negative side, yeah, it is very much chasing that US exposure, and with rates sort of where they are, and talk of a bit of a slowdown in the US, you'd be a little bit concerned at what spending levels might end up being this year. So yeah, look, to me it's not a screaming buy, but I do like the short term chart.
Yeah, I have to say I've been burnt on Zip and sort of just staying out of it. And it's one of those stocks that I guess, Zip's probably a beneficiary of lower interest rates, at least in Australia, but the US, we're not quite seeing that. But I think the whole buy now, pay later market has still got to demonstrate it can make money. And you're sort of, I don't know whether that's the case. I think the market's still out a little bit on this. So we've got the potentially IPOs for Klarna and floating around. I don't know. Zip has certainly done a lot better than people expected in the US, but and as you say, I'd probably be guided by you on the charts, but I'm just not sure it's going to be a key stock in my portfolio. That's I think there's still uncertainties about buy now, pay later. And if you look at, although the US is on a deregulatory push, if you look at the announcement I think just last week about in the UK, they're going to make all buy now, pay later subject to credit assessment, a bit like was been discussed in the Australian marketplace. So there is the regulators are sort of stepping up the ante a little bit on this market. So that's going to make it harder, I think, for these companies longer term. So I think there are headwinds in buy now, pay later. That's just my feel. You got any thoughts on that at all, Michael? Or
No, I agree with everything that you say there. It's a little bit difficult, I think, to because of the regulatory environment to understand where it could be over the next few years.
Okay. Let's go to a question from Chris on Macquarie. Hi, guys. You buy us at Macquarie at these levels, which is MQG.
Look, we're definitely buyers of Macquarie several weeks ago. But look, I think up at these levels, I'd be waiting for a pullback. I'm still a holder of Macquarie for clients. I think it can do better than current levels in the long term, but I think it can finesse a better entry point. And that just comes back to the broader market. Obviously, just to provide a bit of commentary on the broader market. Yeah, the US market's had a massive run off those lows, and you touched on those bond yields. I think the market will be looking for an excuse to take a bit off the table up here, and I think those bond yields will be the excuse over the next sort of several days. So I think that could drag Macquarie lower. I think if you can get it under $200, then it's worthwhile, but I don't think you need to be chasing it here.
Yeah, Macquarie's, I think, probably still a lot more correlated than a lot of stocks in Australia to the US market. So that's probably why Macquarie's down today as much. Yeah, look, if you look at that chart, Macquarie's one of the stocks that hasn't gone back up to sort of the what was an Independence Day? What was that day called again? Before tariff, Trump got bullish on tariffs. Macquarie was comfortably around sort of 225 to 230. It fell all the way to 170. It's bounced back to 207, $208, I guess. But it hasn't yet got back into the 220s. It's I think it's just languishing a little bit. So I'm probably not a buyer at these levels, would be my guess. I'm probably with you, I think, Michael, on that one. Okay, this is a question from Maris. He asked about Woodside. Hi, gents. Woodside may be making a bit of a comeback in the low 20s again. Good value for the medium term. What's your both fundamental and technical view on Woodside?
Yeah, we were picking up some Woodside, I think, about a week or two ago. I think that, well, firstly, we need to remember that these energy stocks, they're cyclical. It's not, you don't hold Woodside for the long term. It's done nothing in the past, 15 years. But yeah, they're cyclical. So I think where oil is at the moment, I think that's sort of unsustainable. I think, I don't want to see it above 100, but I think in the 60s, it's not going to stay there for too long. So yeah, I think down here at the bottom of the cycle that it's worth picking up some Woodside, but I'm not going to hold it forever. I think if oil can recover over the next several months, then you could see some upside. I mean, something interesting coming out of the US over the past couple of weeks is some commentary from some of the larger energy companies that they think that that whole sort of shale gas situation. It looks like those wells have sort of already hit the peak in the Permian Basin as well. So as much as the US wants to drill and continue producing all this oil, I think that they've already sort of hit the peak. So that'll be positive for oil prices.
So the drill, baby, drill may not actually happen. Is that what you mean? Or
That's right. Maybe not to the extent that they think. But yeah, look, I think it's sort of bottom of the cycle stuff here. I mean, is this the exact low or not? I think we're within that bottom sort of few percent or so of the lows in terms of how far Woodside's pulled back. So around this region, I think that if you pick it up from here, you'll see higher levels over the next few months or so.
Okay. All right. Question here from Jeff about Monash IVF, which has had a bit of a real pullback following a couple of programs and a mishandling of a particular client's, I say specimen, what's the right word? Anyhow, got the wrong outcome for the wrong client. What do you think about Monash IVF? My own view is I don't think all the damage from that is necessarily through the system, but let me throw it to you. What do you think?
Yeah, this one's too hard basket. I mean, you just don't, you can't predict, what effect it's going to have on future sales. Obviously, there's a negative effect because someone ended up giving birth to a baby that wasn't theirs. So yeah, I mean, it's just too hard. How do you price in future earnings? Just too unreliable. I think there'll be better opportunities out there in the market.
Yeah, on the positive side, I think there are only two major operators, of which Monash is the biggest, and so I think there's still, might be wrong on that, but I think demand is still pretty high. So it's very hard for, I won't say desperate mothers, but very high for families to find too many other clinics. But conversely, it's a bit like an airline losing an aeroplane, right? And a plane crash, you just don't know what it does to people and what it's going to do to confidence. And just that's the challenge. Maybe all the fears out there, and this is bargain basement territory. But it could be if customers vote with their feet and just stay well clear, and Monash isn't able to demonstrate that it's got the right procedures in place, who knows, right? So I sort of agree with you. I just don't. If you're a holder, I think you're in a different position to a speculator. A speculator, I'd say, very speculative. But as a holder, well, maybe you hang on because it's just who knows where it can go, right?
Yeah.
There's a question particularly for you, Michael, from Jeff. Says, question from Michael: can you suggest good books or video series on learning about technical share trading?
Well, I've got some videos on my website, fairmontequities.com. Look, I mean, I think no specific books. I think it's good to learn about candlestick charting in general and some basic patterns. And I think that gets you a long way. And then, I think generally, you're better off just understanding sort of price action. Steer clear of, in my personal opinion, it might upset some people, but I think you don't need to get too involved in a lot of different indicators, GAN, all these sorts of things. I think just try to keep things as simple as possible. You don't need you don't need 10 monitors with 100 different indicators. I think just basic candlestick charting and price action, I think, rules over all the other indicators.
Okay, a question about Polynovo from Alex. Not a stock I follow closely, so I'm going to throw this one to you, Michael. Just do PNV's the stock code on that.
Not one that I follow either. I mean, I'm just having a look at a chart on my end here going back the last sort of 5-6 years, and it hasn't made any progress. We're talking, sort of $1 up to $4, and then it's last couple of years it's banged around between about $1 and $2.50. And I suppose on the positive end, it's back near that dollar range. you could perhaps be picking it up here and saying, well, if it drops under $1, I'm out. I'll risk that 30 cents and maybe it recovers back to levels over $2. But yeah, not the best looking chart and not one that I've followed, to be honest.
Okay, let's go into a stock that's had a bit of a wild ride. This is on Cedarwood Properties. I thought this was almost a dormant stock. So CWP, I haven't been following that, but let's have a look what's gone on with Cedarwood Properties. Have I missed something here? What's going on there?
I think we both have. It's not one that I've been following either, but I could see that, yeah, obviously it's run hard, and you can have a look at the bottom there, the volume. You could see the spike in those bars there. So clearly there's a lot of volume that's gone into the stock. Yeah, I don't know what's been announced, but yeah, just look, it's hard when a stock moves that hard. You really need to know the reasons, but it could easily, when something moves up vertically, it could easily give back a lot of that as well. Especially if the broader market now has a bit of a pullback, you might see a bit of profit taking. So I wouldn't chase it up here. And yeah, look, maybe if it can give back some of those gains, revisit it.
I noticed done a land acquisition. Has also done a couple of presentations, a third quarter update, which I think is what probably triggered the run up, but not something I've caught up on Cedarwood Properties. So I think maybe given that sort of almost vertical line, caution is perhaps a little bit of the order of the day on that one. Okay, another stock that's been a bit hot is EIQ or Echo. Now, you might have missed our program on Monday, Michael, but we had our colleague from Shaw on the program, and they were very bullish on EIQ or Echo Limited. Done a capital raising, I believe, at 30 cents. It's described as perhaps a baby Pro Medicus, ? Right? Do you know anything about Echo IQ Limited?
No, I don't. Do you know why it fell so much a few days ago?
I don't know why. I did a capital raise at 30 cents, and I suspect it was down at the 22s the other day. It's had a big run up, though, from about 15 cents back in September.
Yeah. Not one I'm familiar with, but look, on a positive note, after that massive drop off, it has rebounded pretty well. It's at least recovered half of those losses. So yeah, clearly, a few holders were sort of shaken out on that day, but it wasn't enough to drag in any more selling. So that's a positive. So yeah, maybe, yeah, especially now that it's trading under that capital raising price, yeah, maybe there's a bit of value there, but not one I'm familiar with.
Okay, apparently it's about to host a webinar soon on strategic development. So it's probably what that means we don't know. So now out of the trading hall. Okay, so we'll have a look at EIQ or Echo Limited. Okay, a couple of questions on NextDC. One from Max. It's all these data center companies are sort of just struggling a little bit, but what are your thoughts on NextDC, which we liked, but and got very, very cheap a couple of weeks back. It's had a bit of a rally back and now just edging down again. I think there's a few shorts on it as well, from what I understand. So what are your thoughts on NextDC?
Yeah, this is one that yeah, a few weeks ago we decided to pick some up as well. It looked obviously good value. The market was bouncing. We thought that might have been an opportunity. I think these data center, anything related to data centers, so NextDC, even Goodman Group now, because they're expanding into data centers. I think they've been oversold. Now, the reason for the sell-off, I think, in the last few months was if we remember back to DeepSeek in China apparently being more efficient with their AI. But history's shown that when things become more efficient, people tend to adopt it more readily, more quickly. So I think initially there was a knee-jerk reaction that we would need less data centers because we wouldn't need to house so many of these physical chips. But I think the opposite's true. Yeah, if if we could become much more efficient at AI, then yeah, a lot more people will be using it a lot more often. So the demand for data centers will still be there. If anything, it would increase. So yeah, good value here. It's having a bit of a wobble the last few days on the chart, but I think there's further upside in this one. I'd be any further dips, I'd be happy to buy it.
Okay, so I think that's a fairly positive. I think the other thing that happened with the data centers was that it wasn't just partly it was DeepSeek, but also there were reports that I think some of the big players, Microsoft and others, were pulling back some of their forward orders or something.
That's right. Yeah, I heard that
Yeah,
as well.
and
Yeah.
whether that was accurate or not, who knows? It certainly was a well-sourced rumor, and so globally the data center market got sold off a little bit. But yeah, next DC, I still think looks pretty good value down here. It's just at the moment, it's just that little bit of uncertainty around what's happening in that industry, I think is probably fair to say.
Mm.
Okay, this one a question from Pam. What are your thoughts on the major miners, BHP, Rio, and Fortescue? Are they likely to go higher?
Yeah, I think
What's
so.
your thoughts on commodity prices? I might have asked that one. Let's go to the stocks though first. So
Yeah, I think look, we're picking up some more BHP again, sort of a month ago. Down here, I mean, similar thoughts to when I was talking about Woodside earlier. I think these are cyclical. You don't hold them forever, but I think we're at the bottom part of the cycle. I think that the decline recently in some of these resources has sort of been made worse by um, just the great performance last year in tech stocks and the big four banks. I think that a lot of funds were flowing into to those sectors at the detriment of resources, and obviously with China's economy just having a bit of a wobble last year, it didn't inspire a lot of confidence. But yeah, look, I think when everybody sort of gives up and hates these stocks, that's when they turn around. So I think that there's quite a bit of obviously stimulus coming out of China, which helps on the demand side. But I think a lot of these companies have been pretty starved of capital, and that will have an effect on the supply side. So yeah, I think this year can be pretty good for these resources. So Rio's not one that we've bought, but we do have exposure to BHP, and I think even Fortescue is looking quite interesting here as well.
and do you obviously you prefer BHP and Fortescue to Rio? Is that right? Or don't want to put words in your mouth, Michael. I'm just trying
No,
to.
that's correct. I mean, at the end of the day, Fortescue and Rio are pretty similar in that they're just iron ore. I mean, Rio's mostly iron ore.
Mm-hmm.
BHP now has a lot of copper, and the copper situation looks quite interesting. Um, just in terms of there's been quite a bit of buying of copper out of China, and supply doesn't look that crash hot either. So BHP, if you recall, they bought Oz Minerals and they've already had some copper mines anyway. But I think the copper story will help BHP along.
Okay. All right. Here's a stock that's been going up and up and up. Not Commonwealth Bank, but this time Telstra. They were stock that no one would. I couldn't get anyone interested in Telstra about 6 or 8 months ago when I thought, geez, Telstra looks cheap, but I had no expectation it would get up to $4.70. Wow, I thought about 4.30, 4.40 was value. Well, what do you make of that chart, and what's your view on
Yeah.
boring old Telstra?
Yeah, well, I have to admit I've never been a fan of Telstra, and I would have been one of those people 6 months ago saying I just can't see this thing going up a lot more. So yeah, hats off to you. I didn't, yeah, I wouldn't have picked that one. Look, it's trending. You'd have to say it's still got an uptrend to it. I'm not sure if it could continue higher, but yeah, if you're a trend follower, you'd be sticking with Telstra. But I'd still like to think that there'd be better opportunities out there. Maybe 470-ish. Yeah, I don't know. Surely there's got to be some other opportunities.
Well, you think they must be getting into, we're not quite at the top of the, I think T1 was 340, T2 I think was 735, and T3 was something last. We're not quite at the area now where there's been a lot of holders who've got Telstra at much higher prices, but given where it's been the last 10 years, those T's were, I think, the last Telstra issue was pre-2000, so maybe it's longer than that. Well, I got my dates out. Yep. Adjusted for inflation, it's a $6.85 share apparently. Yep. So it's getting back up there. But if you look at that chart, the recent run up, which I just think is scarcity, not scarcity, it's just safety play, seems over the top. Maybe lower interest rates are helping because of the yield, and the Telstra's yield of still over 4% looks pretty attractive to Commonwealth Bank's 2.7% or something. Anyhow, maybe I haven't recrunched the Telstra number, but way up there. Okay, look, a stock to finish on. You mentioned it earlier. Let's just have a look at CSL because it seems like it may be starting to find a bit of a base there. What do you think both? Because I think both. Let's mention both the fundamental view and the technical view on CSL, Michael.
Yeah, look, I mean, CSL still grows earnings, really well. I mean, obviously there were a few hiccups around the whole COVID sort of era there, but yeah, you're right. It's sort of at the bottom of it has been sort of range bound since COVID, and it's sort of bouncing off the bottom of that longer term range. But yeah, look, it's not. I mean, there's nothing hugely inspiring about the chart at the moment, apart from that it's sort of at the lower end of that range and seems to be bouncing. It's not getting a lot of upside momentum yet, but yeah, look, I think that's one to keep an eye on. If it can hold here and you see a bit more money flow into the healthcare sector, I think it's just a matter of time until CSL heads back up. But you just got to, I guess, weigh the opportunity cost of being there for a long time while it does nothing, and you could potentially be making money elsewhere. But yeah, if it's not a buy now, it's definitely one to keep an eye on.
Are we out of the woods now as far as President Trump and pharmaceutical healthcare companies, or has that sort of just gone on to hold a little bit? That's been one of the things that's been keeping CSL down. I know. I fear that they might be subject to some sort of impost.
Yeah, look, who knows with Trump, but yeah, definitely the way they're trying to bring down those sort of pharmaceutical costs, yeah, it could be a negative. But I guess we've seen that the announcement is one thing, but the reality is another.
Yeah.
When it comes to him. So maybe as we move towards a more realistic reality, you might get a bit of a relief rally in CSL.
Finally, a question without notice, Michael. Is there one stock you'd like us to have a look at that you really think there's a lot in the chart there at the moment?
Yeah, actually, one stock that we're taking profits on today is Catapult. I think it's done just over.
Okay, that's CAT, isn't it? Right, from memory?
CAT. So I'm just watching. We're sitting there this morning and watching the thing up another 10% today, and just thinking, why is anybody chasing stocks here? I just think with the market up at previous peaks, it's due a bit of a consolidation. So, this stock was $4 only a few weeks ago, and as we could see on the screen, it's $5.26. I don't know who's paying $5.26.
Just for viewers, what is Catapult? Just remind us what Catapult does again.
So it's mainly sort of wearable technology for sports stars. So it started off with I guess the AFL players and so on wearing things that could tell you about how they're performing and their heart rates and all these sorts of things, and they're expanding into the US, major basketball.
So it's a global market. It's chasing a global market, presumably, but
yeah, and I think it can do well, but you don't need to chase stocks that have, as we could see on the screen, have done that. Just wait for a consolidation. I think, as we mentioned at the beginning of the show, we're probably due one. We'll probably blame the bond yields, but let things cool off a bit, and then you'll get a better entry point.
Okay, well, I'm sure there was some very, very sound counsel there, Michael. Thank you for joining us. That's Michael Gable. He's the Managing Director of Fairmont Equities. He's joined us today on Boom, Doom and Zoom. We'll be back at the same time next Thursday. We'll see you then at 12 p.m. Don't forget our show on the Monday. And for everyone at the Switzer team, it's good afternoon.